5-star copies all. Go ahead. Message to observer. Alpha 3 rounds. AT delay in effect. 3 guns. Bravo 2 rounds. 2 guns. Smoke on effect.
Hey, what's up, y'all? This is Andrew from the Options Millionaire community, and today I want to talk to you about the morning range. The morning range was created by Linda Raschke. She was a hedge fund manager and highlighted in the Market Wizards book series. Excellent resource, by the way, if you haven't read those series, highly encourage you to do so. Now, in those books, Linda Raschke highlights the fact that most of the liquidity is transacted in the first hour of the day. And that first hour is very crucial to understanding what the rest of the day is going to do. It sets up the rest of the day. Now, in knowing that, she wanted to create a strategy that could take advantage of that action. So she created the morning range. The morning range is simply the high and low of the first hour of the day. Now, the morning range is pretty simple to define. So if we were to take a look at this chart here, we would just go to the first hour, which is right there, and then we would plot the high and low for this session. Now, in this case, the high is the last candle of the hour. So I would come to the high, which is about right here, and then I would go to the low, which is right here. And that would set the range for the entire day. Obviously pretty easy to define, right? But the difficulty is in applying this and actually what it means. So what this means is that when the algorithms turn on and the hedge funds and the markets and everything starts to hit the tape in the first hour of the day to adjust for the prior night session, to account for what's coming, the algorithms kick on to their parameters and they set the high and low pivots of the day, where all that liquidity is. Because liquidity means confidence. Now, to help you better understand this, I want to go over 4 good examples of how to utilize these ranges to define a trend up day, a trend down day, a consolidation day, and then a breakout, but a lower retest. All right, so to kick things off here, we've got the chart pulled up for the S&P Futures ES, and this is for July 25th. The first 30 minutes are already pulled up here. So to plot the levels, we need to go to the high tick, which is 45.9250 right here. And we come down to the low, which in this case is the opening candle. And the low tick is 45.7950. That right there is the morning range that we're going to play off for the rest of the day. Now, what I'm going to do here is just hit play and just kind of talk through my thoughts to show what happens to identify a trend up. So the market opens, we have a very strong move up here with a aggressive top wick right here at the top of the hour. And then we consolidate for a little bit before another retest and another drop off. At this point, people are thinking, what's going to happen here? Are we going to consolidate? Is this thing going to dump all the way back over? Are we going to range? I don't know. We don't know at all. But now that I've got the morning pivot set, I could start to plan my attack. So now I know if we drop back off here, I'll be looking for some sort of response. If we come back up, I'll be looking for a response. But let's hit play. So we see already that we consolidate sideways for a while, for about an hour, with no real executable action here. There's not really anything to go off of here unless you want to take a small scalp. Low confidence, whichever, but we do have another retest of this level. So at this point, I'm looking for confirmation of either absorption to move higher or a rejection here, which I'll do back in confirmation with volume price analysis. But you see, boom, we break above. So now is where my eyes peek up. Because when we have a breakout here, I don't want to play the breakout, obviously, but I want to make sure that we have a strong pivot here. So I'm going to be looking for a retest for a breakout. Now on a trend up day, this is an optimal setup. I want to break above the morning range, retest the morning range, and then break above. And my entry would be right about here, right about there. Retest down, enter, and then break above. I never want to take the initial entry because that is a recipe for rejection. But what this morning pivot allows me to do is identify the high liquidity pivot from this morning. Keywords, high liquidity. That drives confidence. And a retest of that high liquidity pivot is going to offer me a great entry to go long. So we come on down, retest, eventually go sideways for a little bit, and then we trend up higher. Now let's take a look at an instance of a trend down day. So this is July 27th. I went ahead and plotted the high and low, the 46.3350, 46.15 on the bottom. And this is the first hour of the day from 8:30 Central to 9:30 Central, 9:30 Eastern, 10:30 Eastern. So we see we already have some nice pivots. We've got this area with a nice top wick rejection coming on down with the seller's volume has taken place here. We have a nice little volume spike, very bearish candle followed up with a green. Now we're going to see how this thing starts to present. So right here we have the fluctuation in price. We have a small spike by the buyers, very, very weak volume that immediately fails. No surprise under unsupported volume. Breaks back under the pivot, comes back up for a retest. We have still no buyer's volume here, so I have no real indication that we're going to put on a hammer reversal as buyers pile in, because the whole point here is to drive value, to find value. And when you do find value, the buyers will hit this and you'll have large volume presented as a pivot. We have neither of that. So I'm going to hit play here and see kind of what unfolds. We have a little bit of buy volume here. We come in, we still hold the bottom of the range. That's very important. We're still holding this pivot that, as we saw earlier, the algorithms have told us that this is the level they want to pivot on, 46.15. A little bit of buy up here, still very light volume. The only time we have a decent fluctuation of price is here, and it's on a top wick to come into a 46.24 consolidation zone. And then immediately right about here, the big seller volume starts to come into play. We start to punch down immediately. We have this candle you see comes down and punches through that zone, prior low, bottom wicks immediately, and then fails. So all of this is very bearish indication to retest this range. And now that we have held under this high volume, we've broken the prior pivot. Things are looking pretty bearish here. And then obviously in this case, we have a large influx of sell volume that flushes the market all the way down to extreme levels. The first inkling to come down here is to figure out, is this thing going to bounce back up or is it going to fall? And you do that through one, confirmation of these pivots, and in my case, volume price analysis. Where is the volume telling me here? And as the buyers have started to defend, we don't really have any high volume spikes. The highest volume spike across the board was at this 11 o'clock Eastern candle here, which immediately failed. So all we have is failure after failure by the buy side, and eventually we come on down and wipe this level to transact lower. Let's take a look at a consolidation day. So during this session here, we've got a quick bullish response out of the gate, and then we consolidate here, putting in a slight pivot a couple of times at this 46.08 level. Let's hit play and just kind of go through the price action. We see here that we have one pivot of the day. We come on down, we test the prior opening right here. Immediately, the buyers defend under supported volume. Remember the last time when the buyers came on down, we did not have supported volume. Here we have a very strong bullish response, hammer candle, followed by extreme volume. So for me, VPA analyst, I'm looking to go long right after this candle. And surely the bulls step in here and we transact it higher. Now in this case, we come all the way back up. You see right here, we immediately touch this level, immediately topic back down under bearish volume. So I'll be looking for this to start to transact back down now that we have a confirmed bear reversal. Let's see what happens. All right, so we see this thing come back off. We have a very strong hammer candle under mostly sell pressure here, and then of course that doesn't have any indication for buyers, because even though we hammer under sell pressure with not a lot of buy, the next candle immediately fails, and then we consolidate here right at the bottom of the range, and this continues for a long period of time before eventually putting in another low, coming back up and pinning to the level. And then once again you see the volume shift clearly between here and here. The buyers start to defend, move it back up, eventually closing out right in this area. But you see that the pivots are very clear. Once the algorithm sets the pivots in the first hour, you can have some good trades off there. In this, if you utilize this system, you could start making just as much money as consolidation days as you can on trend days if you know how to play these pivots. A lot of people are afraid to play the pivots because they don't really know what they are or where they are. All right, now I want to finish off with a day that breaks above high and then retests back down. All right, this session, the high was 46.0750, 45.8975. We've had a very strong pre-market. The market opens, immediately red candle, hammers back up, and then climbs back up, and then puts this large pivot in here, and then finishes the first hour with this range. Now I'm going to hit play, just kind of see what happens here. So immediately, you see off the bat here that we break the high. We come back off this first pivot, immediately buy back up, retests. We have this little couple of failures here. So we retest, fail, a little bit of fail, another failure, but eventually buys back up, puts in a new high, and now I'll be looking for a retest of this level to figure out if I want to go long. So we do exactly that. We come on back down, we test the level once again, buy back up, we keep on going here. And now this is where the rarity comes into play. So we put in a new high, we held the new high, came back up, and then we failed, and now watch what happens. This is a lower probability event, but still a very awesome utilization of these levels, because we used this level a couple of times. We came down, bounced up again, and now the other test, we fail this one, and then the sell pressure picks up. So we have a very, very high sell pressure, very strong sellers coming in here. Now this is where it gets antsy, because how do you know this is going to start coming off here and just continue to sell off all the way back off? We don't know that. However, we do know there's already been a historical strong pivot from the algorithms to start the day off. The very high liquidity we talked about earlier, aka high confidence, high liquidity is high confidence, bounce right here at this 45.89. We'll be looking for something. Now, what do I mean by something? I don't know if this is going to blow on down and trend down or bounce. I do know there's going to be something. It's either going to consolidate and move up, consolidate and move down, or just consolidate here, period. Let's actually see what happens. Right off of it, we bounced on a strong move here. Immediately strong hammer candle that has strong volume here, and then the volume continues on a lot of momentum, up and up and up, and then it comes right up to the pivot again before the first red candle. Now in this case, you see that we come up here, we have another test right on the level, fall back off, build back up, retest and hold, so on and so forth. And now this is what we do. We just kind of consolidate right at this level for the rest of the session. Now the market's closed. So you see, this is a great representation of a breakout trend up morning that fails, comes back down and tests the bottom of the range. This is a low probability event. It doesn't happen very often, but when it does, these ranges will greatly help you identify when to go long. Adding these lines to your chart is a quick, simple way to start identifying these high liquidity pivots in the market. I, being a volume price analysis trader, I require volume to drive confidence. The more volume, the higher the confidence. The higher liquidity equals more volume, and that only comes in the first hour of the day, unless there's some sort of catalyst or some sort of binary event that happens later on the day. But typically, the first hour drives high confidence, and setting these levels allows you to play off of those throughout the entire of the day. It sets the tone for the entire day. Hope you enjoyed this quick video. If you're not already, please subscribe to this channel. You get access to more educational video, and you get notifications for our daily live streams, Monday, Wednesday, Friday live streams for the morning, and then Thursday afternoons at 1 p.m. streaming on Bookmap server. In addition, you can come over and join the Discord server where we do daily streams. We talk about everything related to the market, learning systems, volume, how to identify pivots, and general market consensus. I appreciate you taking the time to watch this video. Until next time, I'm out. See ya!